What would you do if the IRS showed up at your door demanding $860,000? That's exactly what happened to one successful physician who nearly lost everything she'd built. But here's what's even more shocking. This entire nightmare could have been prevented with one simple change in how she handled her taxes. I'm Todd Miramon, Chief Operating Officer at Champion Tax Relief, and we've helped business owners resolve over $1.5 million in tax debt. Today, I'm sharing a real case study that reveals the most dangerous mistake putting medical practices and small businesses at risk right now. And with the IRS ramping up enforcement in 2025, you need to know this before it's too late. In this video, you'll learn the red flags that signal you're heading for serious tax trouble, the emergency response plan that saved this doctor's practice, and the exact steps to protect yourself before the IRS comes knocking. But first, let me show you how this situation spiraled out of control, because this could happen to any business owner who makes this one critical error. The warning signs everyone missed. It started like many successful medical practices, a dedicated physician focused entirely on patient care while trusting someone else to handle the business side. In this case, it was a family member managing the office for over 10 years. The practice was thriving, bringing in over $1.2 million annually, and the doctor had multiple physician assistants, a growing patient base, and even investing in properties for retirement. From the outside, everything looked perfect, but beneath the surface, a financial disaster was brewing. The first warning sign came in 2017 when an IRS agent showed up at the door. That's when they discovered the office manager had been throwing away IRS notices about unpaid payroll taxes for years. But this was just the beginning. Let me walk you through the 3 critical mistakes that turned this into an $860,000 nightmare. Mistake number 1. The just practice medicine mindset. The doctor's exact words were, "I just did the doctoring." While focusing on patient care is admirable, completely disconnecting from the business side is dangerous. Here's why. No oversight of tax fines or payments, and no verification of compliance requirements. This hands-off approach is exactly what the IRS looks for when determining willful negligence, which can mean penalties of up to 75% on top of what you owe. Mistake number 2, zero documentation systems. When the IRS examined their 2014 returns, they found something shocking. 0 deductions claimed on over $500,000 in income. The IRS agent himself said this was highly unusual. This happened because there was no organized bookkeeping system, no regular financial reporting, and no documentation of legitimate business expenses. The result? The doctor paid hundreds of thousands more in taxes than necessary. Even worse, trying to correct this years later is extremely difficult without proper documentation. Mistake number 3, complex business structure without professional guidance. The practice had multiple entities, an S corporation for the medical practice, an LLC holding company for properties, personal real estate investments, but there was no clear separation or proper management between these entities. Money flowed between them without proper documentation or structure. This is a massive red flag for the IRS and makes it nearly impossible to prove legitimate business expenses and deductions. The emergency response plan. Once we identify these issues, here's the exact plan we implemented to save the practice. 1. Immediate compliance actions. We filed all missing returns, set up proper bookkeeping systems, documented all business expenses, and separated personal and business accounts. 2. Strategic negotiation with the IRS. We corrected prior returns, applied for penalty abatement, structured manageable payment plans, and protect business assets from seizures. 3. Prevention systems. We had regular financial reviews, professional tax planning, compliance monitoring, and a clear separation of the entities. The results? Through this process, we were able to resolve the immediate crisis, protect the practice from seizure, reduce the total tax liability, and create a sustainable compliance system. But here's the most important part. This entire situation was preventable. The critical lesson for every business owner. If you take away anything from this video, let it be this. You cannot afford to be hands-off with your business finances. The IRS is increasing enforcement actions, and they're specifically targeting medical practices and small businesses. Here are the 3 immediate actions you need to take. 1. Review your current tax compliance status. And then 2. Implement proper documentation systems. And then 3, get professional guidance if you had multiple business entities. But there's something even more important you need to know about protecting your business from the IRS. In our next video, we reveal the exact system we use to help our clients reduce their tax liability by 50% or more legally and ethically. Click the video on your screen now to discover how to shield your business from the IRS enforcement actions before it's too late. Remember, it's not about avoiding taxes, it's about being smart and strategic with how you handle them. The physician in our case study learned this lesson the hard way. Don't wait for the IRS to show up at your door before taking action.